Ladies and gentlemen, good day and welcome to the Q1 FY23 earnings conference call of Dilip Buildcon, hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jitendra Shi from Axis Capital Limited. Thank you, and over to you, sir.
Thank you, Rutuja. Good evening. On behalf of Axis Capital, I welcome all to Dilip Buildcon Q1 FY23 earnings conference call. From the management, we have with us Mr. Devendra Jain, Executive Director and CEO, Mr. Rohan Suryavanshi, Head Strategy and Planning, and Mr. Sanjay Kumar Bansal, Chief Financial Officer. We also have Investor Relations team of Essential in the call. To begin with, we shall have opening remarks from the management, followed by Q&A. Thank you, and over to you, sir.
Thank you, Jitendra. On behalf of the whole DBL family, it is my pleasure to welcome all of our partners and investors for our quarter one call of FY23. I will just give a quick update of the overall economic scenario and the industry scenario and the company update, which will be followed by quick look at the financial performance by our CFO. So as always, pleasure to welcome all of you. So to start with, just to give you guys a quick update on the Indian economy. So the Indian economy is expected to hold up well despite global headwinds such as surging commodity prices and disruption in trade and financial transactions. We've all seen the post-COVID world and how people have started to adjust to the new normal now, and how global, not just governments, but central banks are taking steps according to all the challenges that have come in the last couple of years. Even the Indian government and currently the RBI as well has, in its latest monetary policy, maintained a growth forecast of 7.2%. So the Indian economy looks pretty promising. GST collections, manufacturing PMI, IIP, credit, rail freight, services PMI, etc., all have shown robust opportunities in the economy, with the PMI numbers reaching an 11-year high in May of 2022. While we've had good growth, inflation has also been a challenge. To curtail this, the RBI has recently hiked its policy rates by 140 BPS in this current financial year to date, and they have also reduced liquidity in the market to control the inflation, which is above the RBI target of 2 to 6%. RBI has forecasted inflation to be at about 6.7%, and it also expects the inflation to stay elevated for a couple of quarters. But then they expect it to fall to a more comfortable 5% by the start of FY24. We should hopefully see cooling down of prices going forward. Now for the infrastructure update. For the 22-23 fiscal, the Ministry of Road Transport and Highways has set a very ambitious target of 50 kilometers per day for highway construction. Now this translates into a little over of 18,000 kilometers of road build for the entire fiscal. While it's heartening to see the ambitious target set by the ministry, the execution has been a little slow than what was expected. This has primarily been due to the surge in input prices. This has led to developers delaying procurement of materials. So the highway construction slowed in the first quarter of the current fiscal to just 22 kilometers a day, which is down 14% year on year, versus for the last year it was about 29 kilometers per day for the whole of FY22. The recent moderation in key input prices holds good, but levels are still elevated and the situation is still fluid. While inflation remains a key concern, we are hoping that the government and the central bank will be able to rein in more, and they should be cooling. The awarding definitely will scale up significantly in the next 9 months to achieve the ministry's ambitious target of constructing 50 kilometers per day. We're expecting this year to have bumper awarding. NHAI aims to award remaining length of about 14,389 kilometers of highway projects under the Bharatmala program over the FY23-24 timeline. Nearly 55% of the projects that are expected to be awarded, we expect to be awarded under the hybrid annuity model, while 45% projects will be under EPC. This is a rough estimate of what we think. While the road sector has seen good, I'm also very happy to report that across infrastructure sector, the awarding activity was very robust. In fact, according to one report, it has been about 1.77 trillion rupees worth of projects were awarded in the first quarter 23, which is higher 83% year on year. So across the infrastructure segment, there is a push by the government to give out projects and fulfill their national infrastructure pipeline target. Well, moving on from the sector, some recent company updates. I'm happy to report that we received a completion certificate for Sangli-Solapur Package 1. Besides this, we were also declared L1 bidders for about 4,000 crores of projects in the first quarter. And till as of now, today, we've won about 6,000 crores of projects in total. Details of which can be seen in our presentation. Now, moving for the financial performance, I'm just going to hand over to our CFO, Mr. Sanjay Kumar. Thank you.
Good evening, everyone on the call. This is Sanjay Bansal. Let me now move on the business performance of DBL in Q1 FY23. The revenue increased by 22% in Q1 FY23 on YOY basis from 21,463 million in Q1 FY22 to rupees 26,215 million in Q1 FY23. This is due to better execution of the various projects. The EBITDA decreased by 27% in Q1 FY23. The EBITDA margin has decreased on account of following two reasons. The one is execution of old projects which DBL won in 2018, where projects are executed during extended period and resulting into additional fixed overheads which were not offsetted even if there is an extension, we received EOTs. The second reason, increase in material prices like in cement, bituminous, diesel and steel, and even aggregates. These increase in material prices were unprecedented. Finance cost decreased by 15% in Q1 FY23 on YOY basis, mainly on account of decrease in interest on case credit, debentures and mobilization advances. There is exceptional profit of rupees 170 million on account of transfer of balance 51% stake to Cube in one of the subsidiary out of the total 3 subsidiaries under divestment. Profit after tax decreased by 27% in Q1 FY23 on account of decrease in EBITDA. Now let me take you through some important items of the balance sheet. During Q1 FY23, we have spent 100 million rupees on fixed assets. Inventory increased marginally in Q1 FY23 by rupees 373 million from Q4 FY22 due to increase in WIP, which is expenditure incurred on new projects. The receivable increased to 12,227 million in Q1 FY23 from rupees 10,380 million in Q4 FY22 on account of delay of collection period by 5 to 7 days from customer in few projects. The other financial assets increased to 13,151 million in Q1 FY23 from 11,039 million in Q4 FY22 due to unbilled revenue, which is work executed but not certified. The net debt equity ratio increased to 0.66 times in Q1 FY23 vis-a-vis 0.63 times in Q4 FY22 and increased by 1,490 million in absolute terms. The working capital days decreased from 82 days as of 30th June 2022 vis-a-vis 89 days as on 31st March 2022. Now we can open the floor for the questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Dilip Capital. Please go ahead.
Thank you. First of all, good to see after a long time healthy execution. So that's would like to congratulate the team for a good execution. So now coming to the questions in terms of the guidance, particularly first. So last time we said 10,000 crore kind of 10,000 crore plus revenue. So are we slightly upgrading the guidance on the execution front?
No, Shravanji, the guidance is the same as we had indicated last time, around 10,000 crores only. But thank you for your nice words as well. At our level, it is always our endeavor to do the most that we can. And obviously, things at times have been challenging because of COVID, exceptional rainfall, lockdowns. But as business resumes, we are confident that we will continue to ramp up our execution post this monsoon quarter, obviously.
Okay. And on the awarding front, so we already got 6,094 crore, and we are looking at 8 to 10,000 crore. So do we see even a higher 12,000-13,000 crore kind of inflow this year?
Yes, sir. I think it's a good estimate to assume that we will be doing at least 10,000-12,000 crores plus of order inflow. So we expect that kind of order to come.
So for now, how much more the remaining 4,000 to 6,000 crore that we are looking at? How much more are we expecting from HAM specifically?
Only it'd be very difficult to divide it between HAM or EPC or different sectors because we have applied across and we are bidding across different sectors. The probability of winning an order eventually when it comes, and that's only which will define the order book, how it will look eventually. But we are applying across all the segments that we work in, and also across both the modes, whether it's EPC or HAM. We're going to be doing similar sort of thought process as has been in the past.
Okay. Now on the margin front, so last time also we indicated that the old projects, because of that, we expect the lower margin. So this time definitely 7.8%, even lower than the last quarter revenue despite a higher execution. So just trying to further understand more. So how much left of the old projects, and do we see the same 7-8% kind of EBITDA margin in the second quarter, and then coming back to the 13-14% that we are looking at in the second half?
Certainly, it is very difficult to give you quarter-on-quarter sort of indication of how the margins will look. What we had indicated last time for the whole year, that we are looking at a 12-13% EBITDA, and that is also primarily because of all these legacy orders that we mentioned in the past as well, that all of them we were incurring additional cost of manpower, equipment, which were not built for, and we are in the process of removing them. So that obviously will have is because of that legacy issues where the margins have sort of contracted. But as these projects get done, hopefully by the end of quarter two, majority of it out, and we have new projects that we start, we should see improvements in that bottom line. So we are expecting our current expectation for the overall year is as we had indicated last time as well, of 12-13% of EBITDA.
But broadly now it would be 400-500 crore orders would be left from the old projects.
हाँ मतलब from the 2018 वाले का अगर आप बात कर रहे हैं तो हाँ उससे का तो मिनिमम करीबन बचा होगा for 2019 के अलग हो जाएंगे तो 2018 करीबन बचा रहेगा.
Yeah. Last on the date front, because that's the only concern. This quarter also has increased from the March 156 crore. So how do we see? Because that's the main concern, because and the major is because of the inventory. So now our execution is also start picking up. So do we see the inventories in absolute terms? So ultimately, if inventory in absolute terms doesn't come down, do we see the date level coming down by this year, and how much are we looking at date level to come down by FY23 end?
Yes, Pravanji, as you mentioned earlier also that we will be reducing debt by around 400 crore from the level of the FY22 what we have told. So now there is an increase of around 150 crore. So definitely 150 plus around 400 to around 500 crore debt we will be reducing by the year end. Okay, as we will be earning the EBITDA margin in the range of 12 to 13%, so we will achieve that. And as far as inventory days are, you are telling in the absolute terms, so it will come down. Now the commodity prices are softening up, so you will see the decrease in the inventory level from the Q3 and Q4 onwards. However, still diesel prices are up, but still we will see the decrease in the inventory level from the Q3 onwards.
Okay, and lastly on the capex, we have just done 10 crore. So in 9 months remaining, how much more we want to do a capex?
So you can take to 10 to 20 crores. It is actually capex is on not on the plant and machinery, it is on the other things like office equipment or all this kind of thing. So you will see in the capex in the range of total for the full year in the range of 25 to 30 crores, not more than that.
Okay. Thank you, sir.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. So my first question is that, sir, I was going through slides and I see the equity commitment required for this fiscal is 10 billion, 1,000 crore. Is that number, is my understanding right?
Yeah, that number is correct.
Okay. So secondly, sir, how do you see the order?
One thing just I would like to clarify over here is that this 1,000 crores of equity, considering the appointed date of 5 HAM projects,
which have been awarded to us in the fourth quarter of the last financial year and few projects in the current financial year. So on those projects, like once the appointed dates or concession agreements are signed and the appointed dates are received, then only the requirement of equity may arise. So it is like the likelihood is that some portion of equity may be in the range of 150 to 200 crores may spill over to the next financial year also.
And when do you expect the divestment proceeds, sir? By what time?
Divestment proceeds, like as we have also indicated in past, like one is that fructifying of the Cube deal in totality. So Cube transaction has, as on date, if we see that it has fructified in totality, 3 projects were to be transferred to Cube by this. 1 project we had transferred during the quarter, and remaining 2 quarters, the remaining 51% equity has also been transferred in the Q2, that is the second quarter. So Cube deal is complete, and whatever was the envisaged consideration, that has also been received from Cube Highways in totality. And secondly, then we have the ongoing deal with the Shrem Inwit, where we have agreed to divest a portfolio of 10 assets to Shrem Inwit. So from Q2 onwards, the divestment to Shrem Inwit will also start. Meanwhile, against the unsecured loan portion, which was invested by Dilip Buildcon in the respective 10 assets to be divested to Shrem Inwit. Against that, already part retirement of the unsecured loan has taken place to Dilip Buildcon to the tune of approximately in excess of 500, more than 500 crores till date, against 617 crores of the total equity required.
That's the money coming from the Canadian Pension Fund. Is that right, sir?
Yeah, Canadian Pension Fund, that line of credit is available to us to the extent of around 293 odd crores. So that depends. So as and when the requirement of equity is there, so we have an ability to draw down that money from Canadian Pension Fund.
Understood, sir. And how do you see the order prospect from NHAI in this fiscal? Do you expect the 4,000, 5,000 kilometer bidding this year, given your talks with the NHAI?
Do you want the current pipeline? Is that what you're asking?
No, so my question is, what is your expectation? Do you think that the NHAI will do, 4,000 or 5,000 kilometer bidding this fiscal?
Are you saying 4,000 or 5,000 kilometers of roads will they award? Is that what you're saying?
Yes, sir.
Yeah, they'll award far more than that. So, in fact, more they will.
Only about NHAI, sir. NHAI.
NHAI and MOS put together will award upwards of 10,000 kilometers. It's what my sense is.
And sir, do you think that they roll back some of the COVID-related relaxation which were provided during the FY20 and FY21? Do you think some of these provisions will be rolled back?
I mean, I'm sure the government will eventually look to roll back some of the relaxations that they went over a period of time. How exactly will they do it and in what manner will they do it is anyone's guess. But I'm sure they will be looking at rolling back the relaxations which were given for an extraordinary situation.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, thank you for taking my question. Sir, what would be our holding in the Shrem Inwit in terms of percentage?
Sir, the holding in Shrem Inwit will increase over time as the projects keep getting dropped into it progressively. That holding, because our equity will keep on increasing as the project keep on dropping. So, like the total deal, what you know is about 2350 crores of the total deal. Inwit units were about 1700 or so.
Correct.
So that will be the holding in the unit that we will have versus the total Inwit value which is there in the public domain that you can see. So that is
the same percentage terms, each holding would be what? 15% plus? 15-20%? That is
20 to 25% के आसपास का आ जाता है सर मेरे ख्याल से.
Okay, 25%. Okay.
जी सर.
Sir, on the irrigation project, so we can see that our two irrigation projects are still not moving, like the Chhara Dam project and that Buildcon Barrage project. So what is stopping us from the execution? Like,
Sir, I could not hear your question. Can you please repeat?
Sir, on the irrigation project, the dam project of Icha, which is still not moving, and also that Buildcon Barrage project also is moving slow. So what is the reason why it is not picking up in terms of execution?
Kharki Dam.
Kharki Dam, yeah.
Yeah, Kharki Dam actually it was held by the state government. Now that has been cleared, so you will see some progress in it. It will start.
I cannot hear you, sir. Hello.
Yeah. So Kharki Dam was actually held up by the state government. Now it has been cleared. So you will see the progress in the coming quarters. And as far as Badbut Bridge is concerned, it has been actually progressed well during this quarter. As far as I know, if you will see the order book, and it is going well. So there is no problem. But yes, you are saying in the rainy season, in this July to September, there will be slow progress. Yeah. After that, again, the progress will pick up. But in the Q1, there was a good progress in the Badbut Bridge.
Okay, so basically now it has started progressing well from Q1. That is what I understand, right?
Yeah. In Q1, in the Q1, Badbut has done the progress good. There was a good progress in the Badbut.
And sir, on the mining front, so you said that this Pachwara mine which we have subcontracted. So what kind of margin we can expect post the subcontracting margin in this project? Because obviously this number will come in our standalone revenue. So earlier we were supposed to do the mining work because you said that there is a limited equity which we have to invest like 50 crore odd. But now we are doing a subcontracting work. So this is going to be the case with CRML also?
So Pachwara, the margin, first question, answer to your first question, margin in the same range we are having. So it is in the range of 16 to 18%, which we are having. So we have subcontracted this. And as far as CRML is concerned, we are still exploring that. So there will be groundbreaking in the next 2 to 3 months. So we will see how it should move out. So we will tell you when we finalize.
Okay. So basically, sir, Pachwara you can still make 16 to 18% EBITDA margin, and if at all in CRML also if we subcontract or we do, so if we do then we will be getting what 20% plus margin, and if we subcontract then again 16 to 18% margin. Is my understanding correct?
Sir, I think instead of breaking it into subcontracting or whether we're doing it on our own, our guidance for the margin for the mining project is in that similar range of like what Devendra Goyal said.
16 to 18%.
15% is the guidance that we're giving. The good part and the part that we should be really focusing on is, Pachwara was a project which was stuck for a while. And
right.
And we are happy to report that the progress on it is very nice. And once rains and all these clear, we will see good progress, and there will be coal excavation that will start on this project. Similarly, even for the CRML project, again, the hearty news there as well is that coal production and all that clearance and everything else will start in this financial year. So 2 very large projects, both CRML and Pachwara, when they will operate at their full capacity in one line, they are accounting for almost 1/10 of Coal India's current production. That is the kind of capacity that we will be delivering. So the fact that both these projects will be starting, they will be adding not just significant amounts to the top line, but also to the bottom line of the company. And the good part is this will be like an annuity kind of revenue, which will run. Pachwara is a 55-year contract and CRML is a 25-year contract. So that is, this was not just about the revenue or not about the bottom line. This is also a directional sort of strategy for the company, where our idea was not only are we doing short-term projects, but we are also engaging in long-term projects.
So this Pachwara will have a revenue of 585 crore booking every year, and what would be the revenue booking every year from CRML?
So Pachwara also
in the order backlog,
because Pachwara is a 7 million metric ton miles as of now. So it will be more than that, the revenue that we get in that on a full year when we get a full year. CRML, and when it finally reaches its 50 million metric ton of number, that time around 1,500 crores of revenue is where we are expecting from CRML. And because it's a progressive increase every year, so that's what we should see. Yes.
Got it. And sir, on the bookkeeping front, can you just give us, Devendra sir, mobilization advance, unbilled revenue, retention money as on June?
So retention money is around 700 crore as on 30th June. Mobilization advance is around 900 crore and unbilled revenue is 1,300 crore.
Yes, sir. Thank you, sir. That's it from my side, and all the best, sir.
Thank you.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for taking my question. So, actually, the thing is, my line got dropped, so I'm not sure these questions have already been answered. So, if you could help me with the revenue guidance for the year, and also, what is the EBITDA margin that we're targeting now for the full year, entire year?
So, revenue guidance we mentioned is same as we had mentioned earlier, around 10,000 crores of top line, and the EBITDA guidance also, as we had mentioned earlier in the last quarter as well, will be in the range of 12 to 13%.
Sure. So I'm assuming, this 12 to 13% would still have some impact from some of these legacy orders, FY18, 19 orders, right? So
we discussed that in detail earlier. Yes.
Sure. So just want to understand, I understand, because of this legacy project, you are able to do what the margin that you are able to do. But then, how about the new orders? The 6,000 crore rupees of new orders that you've managed during the year. What kind of margin would these orders entail? Is it that because of competitive intensity, there's been some moderation, or you still are able to kind of manage 16 to 18% kind of margin that you used to manage earlier?
So obviously, in a high competitive intensity, margins do take a hit. Along with that, the fact that the inflation has been high. So, like to give you an example or to give you some facts, last year they Buildcon bid for more than 100 projects, 105, 106 odd projects, and we won only 6 out of those. So the competitive intensity was pretty high, and that showed in the industry and its margins. However, these projects, we are expecting margins of 15-16% in the one that we won even right now. We are expecting margins to be in that range. And then depending on other factors that may come, we can see how the margins may improve further if inflation cools down and all, and how the execution eventually remains. But as of now, they will bid around those numbers.
Sure. And on deleveraging part, I think we're looking at around 500 odd crore rupees of deleveraging from our Q1 number. And at the same time, we have this 1,000 odd crore rupees of equity requirement, including expected appointed date for 5 of these new hybrid annuities. So essentially, we're looking to generate almost around 1,500 odd crore rupees of number from the business over the next 9 odd months. So if you could just help us understand, does it mean we're expecting business to kind of generate seriously good amount of money? You're expecting working capital to get released in a big way, or how do we intend to kind of fund this entire 1,500? Because as I look at asset monetization, what we would be able to get in H2 is there's 100 odd which is pending from SHEM out of that 615 odd, and Cube would be another 100 odd, right? So there's only around 200 odd which is supposed to come from asset sales. Even then, you would need 1,300 from the business, which seems to be a tall task given the fact that the margin still are at around 10, 12 odd % kind of number.
So besides the margins that the business will make, the asset sales that we've done, the 13 assets that we've sold in total, 3 to Cube and 10 to SHEM.
Yeah.
There we're making a profit of almost 900,000 crores on the equity that we invested. So because of that, so what you have calculated is only the cash amount. We are also getting units for the InvIT, which is about 1,700 crores of units also that the company will be receiving. So there will be monetization of those units as well, which will help us in investing that equity into the new projects and also help us in reducing debt. So that's there.
Sure. So does it mean we're planning to sell these units in this year itself? And if that is the case, why did we not go for entire cash transaction with SHEM?
So there were 2-3 reasons for that. Like for example, going in an all cash transaction, your interest rates and everything would have been frozen. Now, because of the increase in interest rates right now to about 140 basis points, I think, to my knowledge, about 200 plus crores of valuation has already increased for our units. So what we would be getting now, we are already increased by that much. Had I sold it only pure cash, that would be a loss of 200 crores. Number two, there is a taxation sort of implication when you sell the capital gain tax that would come. When you have taken it into units and then, so there is a huge, long range of, I mean, I can go on point why we have chosen this.
No problem. I'll take it offline.
Yeah, no, but the two, like I said, the two major reasons, like I said, there's already been an increase in valuation by more than 200 crores in the units that we sold. And to my knowledge, or what I expect RBI to raise interest rates further this year. So I think base rate would come around 6% by the end of this calendar year, in fact, given the pressures of different central banks around the world.
Sure. And do you see this large market for the kind of volume that you intend to sell, I mean, in terms of NVT units?
So the good part is this is now a very well accepted currency. Even if when we thought we will raise funds against these units in terms of if we have to raise debt or whatever, because there is much more value in retaining these units and the cash flow that comes from it on a regular basis. And that was the ideology when we entered into this transaction. But yes, there is also a robust market, and the InvIT and the REIT platform is only getting more and more interest from both foreign and domestic players. So to answer your question, yes, we do see a market for not just sale, but we also see a very robust market for even putting these units as collateral and raising capital against that.
Sure. Okay. Sure. Thank you. And that's it from my side. Thank you.
Thank you.
Yes.
Participants who wishes to ask a question may press star and 1. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you for the opportunity again. Sir, what's the DBL infra date? Last time it was 700 odd crore. So is it the same number?
Yeah, it is the same number, sir.
Okay, so still we can raise further another 200-300 odd crore from that.
Yeah, correct.
Okay. Second is just trying to further understand in terms of the InvIT that you are saying that you particularly still are not able to clearly understand. One aspect I understood that we got the higher valuation and the capital gain tax. That's why we went for the InvIT. But still not clear in terms of how much are we planning to sell, and do we think that that can be done before March, so that ultimately the previous participant what has asked. The question is in terms of the debt reduction, how much cash that further we can receive from now.
Just to answer your question, see, we have multiple sources of funds that are going to be coming to the company to meet the overall equity requirement, including the raising of funds against the InvIT units. Okay, so InvIT units are going to come to us progressively starting from Q2 onwards. And on need basis, we'll decide what is the quantum of fund that is required. And as Rohanji explained, this is a well accepted basically instrument in the market against which the funding can happen. Either we can sell the units or we can raise funds against the units. Idea is that while we retain the InvIT units, there is a good potential of having the future upsides over these units, because we are into the rising interest rate trend, and considering this, always if a InvIT is backed by a portfolio of HAM assets, you will see if there is a interest rate is in the rising scenario, then there is a positive cash accrual which comes to the InvIT in terms of the upstreaming of the available cash flows. So all these benefits are likely to accrue to us also as a unit holder. And while we are holding the units, there will be also a tax advantage in the dividend distribution from these units, because dividends in the hands of the unit holders will be tax free. So all these advantages are there. That is the reason we have chosen InvIT rather than going for a bilateral sale, where typically on the sale debt, whatever is the bank rate, as per that bank rate, the deal typically gets, or the evaluation gets frozen.
Okay. And the equity investment that we have given on the presentation on the slide 22, so that does not include the latest 3 HAM projects that we received.
No. That is inclusive of all the HAM projects that we have received. So that is what I am saying. The concession agreement for these HAM projects are yet to be signed. So post that, then again 150 days time is for the financial closure. So there is a possibility that part of the equity from this 1,000 crores in the range of 150 to 200 crores that might get spilled over to the next financial year.
Okay. And broadly for the full year on 10,000 crore revenue, in terms of this quarter, we have a 100 crore kind of a negative CFO, cash flow from operations. So for the full year, how do we see? So just ultimately, I'm trying to just figure it out how much cash we can get, which will help us to reduce the debt.
So it was just 40 crores. It was not 100 crores. And also as of now, it is very difficult to give you a guidance for the coming quarters. But overall, it will have a positive implication. So that is how we have planned for our debt reduction, 500 crores by the end of this financial year.
Okay. Thank you.
Thank you. The next question is from the line of Rohit Kumar from DAM Capital. Please go ahead.
Yeah, thanks for the opportunity once again. Sir, my question is, given our cash flow projection and the requirement for the equity for our under construction HAM project, do we have any more appetite to take HAM projects in near term?
Sir, like we mentioned, the equity commitments that you are seeing right now is only an estimate of when the project will start, and accordingly there is a likelihood, a good likelihood, that about 150-200 crores of equity might not come this year. It will come that next year. Now, that is the first part. The second part is you ask, do we have more appetite? Now, if we win any project now, or even if I'm bidding right now, if I win any project in October, September, November, any HAM project, typically, if you look at historically, usually takes about 9 to 12 months to begin from the date of bidding. So even if I win it then, any equity commitment that will come in the second half of next year. That is a best case estimate that I'm saying. So that should not be a problem. Our monetization of assets, already of that has been committed, along with the new assets which will be in high stage, that will also be getting there. So I don't foresee that as a impediment currently.
Understood. Secondly, sir, as the media reports, the government is considering to reducing the government support for HAM from 40 to 20%. Do you think this will help the larger players?
Those reports, I don't know what you want me to comment on the media reports, because we see...
No, I was asking, sir, in your opinion, if 40 the government support...
Yes, I think it's unlikely that in the near term they will change it from 40%. That is my personal opinion, because it is a larger decision, and I don't think so it will happen that soon. Even if it will happen in a more progressive manner. It will happen maybe in next financial year. They will think about doing something, but not in the near term.
But 40 becomes 20 should help the larger players. Am I right in saying that?
Sir, we are talking about a fictional situation which we don't know whether it will happen or not. But obviously, if there is a reduction in the government support of any project, that will obviously reduce not for just the larger players. For any player, it will increase equity outflow, and it is equal for larger or smaller or any size of player. Equity infusion will be the same on the same basis of a financial model. So it impacts all the players in the industry, which is why I'm saying I don't think so that change will happen anytime soon. Definitely not in this financial year.
Understood, sir. Thank you, sir. Thank you, and all the best. Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I will now hand the conference over to Mr. Jiten Rushi for closing comments.
Thank you. So just one last thing, sir. Do we have a ROFO agreement with State for future assets?
Yeah, Jitenji, we do have understanding for future assets with Shem as well. Yeah.
Okay, sir. Thank you. Thank you, sir. Thanks for giving this opportunity. Thank you everyone for participating. Happy Independence Day. And sir, any last comment from your side?
No, just thank you everyone for being on the call and for asking all the questions today. As always, if anybody has any more questions, please feel free to reach out to our team and we'll be more than happy to address any and all of your queries. Just wishing everyone a very happy Independence Day in advance, 75th year of independence. And wishing a nice, happy, long weekend for everyone. Have a good one and look forward to seeing you guys next quarter.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.